A super good morning and a happy Thursday. Welcome to today's episode of Morning Wealth. Three things that we will talk about: broad market sell-off, earnings roundup, and buckle up for more tech earnings. Stocks fell hard on Wednesday as rising coronavirus cases continued to shake investor confidence in the global economic recovery's staying power. The Dow fell 943 points or 3.4%, while the broader S&P 500 dropped 3.5% and the Nasdaq was down 3.7%. Worsening coronavirus case numbers may make more stringent restrictions imperative across the US and Europe, potentially dealing a setback to a fragile economic recovery. New US cases climbed back above 70,000 as states across the country continue to report high levels of fresh infections. The VIX climbed to the highest level since June. The dollar rose against every G10 pair, save the yen. The Aussie was the weakest performer. Treasuries were little changed. The 10-year yields were around the same 0.77%. Gold declined more than 1.5%, and Asian equity futures are indicating to more losses. Oil tumbled amid swelling US crude inventories. The EIA data showed domestic stocks rose 4.32 million barrels last week. That's the biggest bill since July. The stock prices of Facebook, Google, Twitter all dropped more than 5% after the chief executive squared off against the US senators in a congressional hearing over their company's role in moderating public discourse. Microsoft was also down 5% despite the company saying that sales had jumped thanks to surging demand for its video games and cloud computing services. In terms of sectors, all the sectors were down. Tech was down 4.33% and energy was down 4.22%, while communication services also down 4%. We had a ton of earnings to digest. I'll highlight a few over here. Ford posted adjusted profit of about 65 cents that came in well above the 19-cent consensus. Gilead lowered its full-year forecast and said remdesivir sales for the third quarter were at 873 million, topping a 818 million estimate. AMZN Bank's cash earnings from continuing operations fell 42% to 3.76 billion, primarily driven by a bad debt provision of about 2.74 billion. Blackstone's distributable income per share beat as AUM rose and perpetual capital jumped 19%. Boeing's revenue topped as commercial plane deliveries missed. The company is cutting 7,000 jobs and sees its workforce at 130,000 by the end of the year. UPS failed to give a forecast as it beat on earnings and revenue. GE was a surprise. GE jumped after posting a surprise profit and positive industrial free cash flow. In terms of payment services, Visa rose on smaller than expected drop in spending by cardholders overseas, while MasterCard dropped after adjusted EPS and revenue missed. If you think that was a lot, get ready for the next 24 hours where we'll be looking at earnings from Facebook, Twitter, Google. It's all about digital ads for the three. Facebook would see its impressions and pricings improve, and Google's ad business probably rebounded too as advertisers boosted spending on digital platforms rather than TV, is what Bloomberg analysis says. Twitter also may top expectations, is what the street is expecting. Not to be left out, we'll also hear from Apple and Amazon. The new iPhone 12 could drive the former's guidance for the current quarter, while the pandemic will likely continue to power Amazon's sales results. So lots to digest on the earnings front in the next 24 hours. But apart from that, we'll have the US GDP and two central bankers also. So the next 24 hours is going to be really busy. So on Thursday, we'll have the dollar taking its cue from the US GDP. A sharp snapback in growth is expected for Q3 after the steep contraction in the second quarter. The only question is how much of an improvement there will be and whether it matters to investors. So if GDP growth beats expectations tomorrow, the dollar can extend its gains against the euro, Aussie and other high beta currencies. Meanwhile, the pressure is on the ECB to act. They are widely expected to leave monetary policy unchanged on Thursday, but there is a small chance that they could surprise with a new policy action. Europe's COVID-19 outbreak has gotten out of control. At first, governments were reluctant to return to full lockdowns, but they are quickly realizing that there's no other choice. Japan's policymakers will probably sit on their hands as well on the Thursday's meeting as they see a recovery in line with BOJ's projections. Investors will focus on any changes to the central bank's assessment of risk from the virus resurgence abroad. So lots to digest in the next 24 hours. Stay safe and healthy, and I'll speak to you tomorrow.